Yeah, and I think that, when you're investing in the EV space, this sort of makes the argument for having a basket of all of these names, right? Because you want Tesla, and then you also want who is the Tesla of China, right? Is that XPeng? Is that Li Auto? And it's good to kind of have that broad-based diversification. I think the answer is that these are all going to be winners. The piece of the entire pie of EV again is growing globally, right? We talked about that 14% going to 30%. So massive upside for anyone who sort of gets it right. In terms of Tesla, the fact that they're talking about building a factory that's larger than Volkswagen and BMW in Germany, the home of German autos, which is like, I mean, the Michigan of Europe is just mind-boggling to me. So that tells you that the demand will continue there and the opportunity for car sales continues there.
Judging by the recent volatility of Tesla stock, it's fair to say there might be room for doubt every once in a while. Every investor wants to put their money in a stock that'll actually perform well, and even more, to buy shares when they're still very profitable. Which begs the question, is now a good time to buy Tesla shares? Well, that decision is entirely up to you, but from our speculation about Tesla and going by our Tesla stock valuation, we believe that Tesla stock is still very undervalued. In other words, buying Tesla shares now could give you a lot of opportunities to gain massive returns on your investment. The truth is, Tesla's current stock price does not reflect the true potential of this company, and only a few people realize that Tesla's growth story is just getting started. In this video, we will take you through a few questions why we believe that the Tesla stock price will still go higher in the coming months, and why you may want to buy Tesla shares now that it's still very undervalued. So without delay, let's get started.
Were you upended by this still focus on volume over profit, or had you anticipated?
So I anticipated that, the earnings announcement and call would sort of go like this. There was so much focus on what will profit margins look like when you take out kind of the tax credits and, different types of incentives coupled with the lowering of prices. And the street didn't like it, but I actually thought it was a great call. And I would have said that there's actually calls for the stock to rally. What Elon Musk is doing is continuing to corner the EV market by making EV vehicles accessible. There is a volume gain here. So while you're sacrificing some margin in the near term, you're increasing, capacity to produce more vehicles, interest in purchasing vehicles because they're affordable, and really, taking that stake while everybody else is trying to catch up. I also think that, he has enough of kind of, shots to fire here. He has the Cybertruck coming out, and that's arguably going to be an expensive type of vehicle that people seem to be, really seeking and waiting for. And, so when you have days like this, when a stock like Tesla kind of falls precipitously in one day from, what looks like bad news, but is actually really good news. And then, the other EV makers fall in line with it. I mean, this in my mind is a great kind of dollar cost averaging day on, the top EV stocks.
Tesla has continued to trail the path of innovative technology and will likely do so for as long as it can. This is, no doubt, what has made it stand out amongst other EV companies. The automaker has several projects that are likely going to help it increase revenue over the coming years. And although there are a lot of expectations around these, with more strategic efforts, Tesla is sure to supersede investors' expectations. Hello everyone and welcome back to Tesla Tomorrow. Tesla dominates 26% of the global battery EV market and has performed incredibly in the past years. The EV giant recorded total revenue of $16.9 billion in its second quarter this year, which is a 41.6% increase from the last figure. Similarly, its adjusted earnings per share had a 56.6% increase, surpassing consensus forecasts by 26.9%. This shows that Tesla is set to meet and surpass analysts' price forecast in the coming years. So, is Tesla a good stock to buy right now? We'll find out in the course of this video. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. Tesla's ability to produce incredible revenue is one reason why several analysts are so bullish on the stock. For instance, ARK Invest's CEO, Cathie Wood, recently set a price target of $2,700 on Tesla stock by 2027. Likewise, in 2022, Wall Street analysts predicted Tesla's total revenue to reach $84.0 billion, with adjusted earnings per share of $12.46. Expanding Tesla's product lineup to offer more affordable models would attract a broader range of customers. Introducing different vehicle types, such as pickup trucks or compact cars, can help Tesla cater to diverse market segments. According to Cathie Wood, Tesla's expected robotaxi could potentially see the company's stock price skyrocketing in the future. The Tesla bull claims that the robotaxi business will yield more than half of Tesla's expected earnings before interest, taxes, depreciation, and amortization are considered. She even added that the business could account for 62% of its enterprise value and 34% of Tesla's total revenue. Likewise, Kevin O'Leary, who is a Canadian businessman, entrepreneur, and a one-time Tesla bear, has said that Tesla is not only a car company but a data company, and this may be in fact true. Tesla has a very important competitive advantage, and that is autopilot and full self-driving. Tesla's autopilot system is already advanced, although further refinement and improvement can make it safer and more reliable. Therefore, investing in research and development, data collection, and continuous software updates can help Tesla progress towards full self-driving capabilities. Also, by implementing additional safety features, such as improved collision avoidance systems, pedestrian detection, and enhanced driver monitoring, Tesla can further enhance the safety of its vehicles. Tesla's ability to produce electric vehicles at scale while maintaining profitability sets it apart from other automakers. While there are valid concerns about declining margins due to price cuts, Tesla's track record and the visionary strategies of its CEO Elon Musk give reason for investors' confidence. One cannot overlook Tesla's knack for out-of-the-box thinking. From its unique factory designs to groundbreaking vehicle features, the company has disrupted the industry and outperformed long-standing players like Toyota. Therefore, as new factories come online, the company is likely to find innovative ways to stabilize margins and navigate the evolving market landscape. The electric vehicle revolution has forced even automotive giants like Toyota to acknowledge Tesla's admirable technology and strive harder to catch up. For instance, Toyota's Deputy Chief of Global Production, Yoshio Nakamura, recently expressed his admiration for Tesla's accomplishments, emphasizing the need for Toyota to learn from Tesla's success. And even though Toyota aims to adopt some of Tesla's innovations, they still have to put their own spin on them to ensure a distinct approach. There is no doubt that Tesla still holds the dominant position among EV makers. The automaker has commanded nearly 60% market share in the U.S. during the first half of 2023, with 336,892 units sold, up 30% year over year. A competitor like Ford, on the other hand, sold only 25,709 EV units in the United States, falling from second place in this market last year to fifth place today. No doubt, Tesla's market share is also falling and is widely expected to continue to decline in the coming years as legacy automakers and fellow electric pure plays alike roll out more EV offerings and scale up production. However, Tesla is already sustainably profitable and is generating positive cash flows at its current EV run rate. The car maker recorded a GAAP net income of $2.7 billion and $1 billion in free cash flow in the second quarter of this year. And this was even after cutting prices to help boost demand in today's higher interest rate environment. So think about it. What other company can beat this record? A company's stock performance is largely dependent on its long-term market potential rather than the short term. And although investors could be concerned about their investment in the long term, there is little or no reason to worry. What are your thoughts on this, though? Let us know in the comments section. And don't forget to tell us what your valuation for Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.